The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks, to the Money Masters Show. I'm your co-host, Steve Rhodes, with you. Tom is out for the day. He's actually beginning a birthday celebration, so he'll be, the older you get, you just need more time to celebrate those birthdays. Just want to take those in. So today's not his birthday. I believe it is tomorrow. Maybe tomorrow we'll sing him a happy birthday tune out there. Of course, I want you denters to call in. We'll do it, I don't want to do it a cappella. And 877-927-6648. Right now, we've got the Dow's up 11 points, S&P up 2, Composite up 4, small caps up 67 cents right now. New York Stock Exchange just slightly positive out there. We take a look around the world. You've got the DAX just barely holding on to its gains, up 6 points right now. FTSE also up 6 points. Of course, the U.S. did not do a good job of handing the ball off to Asia last night, down across the board. The Nikkei off 135 points, 1.5%. Not as bad as what we saw here in the U.S. market. You had the Hang Seng down 532 points. That was up 2.5%. The Shanghai off about 1.7%, down 36 points. Gold right now trading out at $17.16. That's up $2. You've got silver up 18 cents out at $31.84. Light sweet crude up 50 cents out at $84.95. The King dollar up 10 ticks right now. What I do have up on my screen is the 30-year Treasury bond trading out at 150.01. And so we'll start there. We had the 30-year Treasury break topside, as Tom likes to say. And if we take a look at that, if we're looking here at this descending tops line, so we take a look at the descending tops off of the July 25th high out there, that price was 153.110. Your next touch point on your trend line would be the highs that were established on both September 4th and September 5th out there. Yesterday, that level has kept bonds in check, as well as on the downside. So now you've got a descending trend line. You also had an uptrending line that would take you all the way back into March of 2012. Bonds have been traveling in this little tight range here. Yesterday, busting outside of that. We'll see if this is a real break to the upside. If it is, what bonds will now do is they'll travel up into the 151.29 level. That'll get back to the September 4th area. Expect bonds to at least try to test the area where it broke out of that descending tops line. So we'll be paying attention to that certainly today and tomorrow. If we go take a look at the indexes, let's go look at the indexes out here. We'll start with the New York Stock Exchange, since that's what popped up on my screen here. Now, the New York Stock Exchange have been traveling in a sideways trading range. It was using the September 6th gap up, the Mario Draghi gap up day. That level had been tested. It held yesterday. You got to close below it. We're talking about the price high of 81.60, 81.60.56. Yesterday's close was out at 81.38 out there. You can see here this morning the New York Stock Exchange tried to get back up inside that, and thus far has been rejected out there. So that is what we're looking for on the New York from a bullish standpoint. I'm looking for the New York Stock Exchange to get back inside there. However, if you do take a look at the New York Stock Exchange, let's take a look at, it's actually kind of strong. So the underlying components inside the stock market here still not showing tremendous weakness. There's stocks that are certainly showing tremendous weakness, such as Apple. But if we take a look at the trend line here, coming off of the lows going back to October 4th, the New York Stock Exchange has got pretty far to fall before it hits its trend line out there. And you'll see what I mean as we pick apart the indexes here this morning. If we take a look at just simply coming off of the most recent swing point low of June the 4th out there, where the market made a move up. If we come off of that low, that price point on the New York Stock Exchange, 72.2288, all the way up to the high that was put in on September 14th. What you'll also see is the New York Stock Exchange has not even made a 0.382 retracement. So New York Stock Exchange kind of makes you say, something to think about it, because this, folks, is a larger swath out there. It's the total breadth of the marketplace. That is on the New York Stock Exchange. Let's go take a look at the what's up next here. Let's go take a look at the Dow. So we'll put up the Dow. We'll go take a look at the trend line. Let's take a look at the longer-term trend line. The same thing, just to keep things in perspective here. We'll come off of the October. In fact, let me first erase this other line out here. Otherwise, it'll just confuse the heck out of you. There we go. So now as we take a look at the same trend line, this is the Dow coming off of October 4th, using June 4th as your next little touch point out there. You can see the Dow yesterday breaking with conviction that trend line, as well as breaking through any kind of horizontal support out there. That horizontal support line happened to be the low of September 6th out there. Also really the swing point from September 5th, the price there, 13,018.74. Wait, let me use the proper one here. It's 12,977.09 is that price point. Looks like the Dow actually might have gotten up there, got up to 12,980. So 12,980 this morning, the high thus far in the Dow. But you can see here, New York Stock Exchange actually stronger. Now, if we come take a look at the same retracement level, let's come off of the low from June 4th, all the way up to the high. On the high here in the Dow was made on October the 5th out there. What you will see is that the Dow has also busted the 0.382, where the New York Stock Exchange hasn't done that. So the Dow could easily come back to the sweet 618 area. That would take you into, I would say, if it's going to make it to the sweet 618, it would pull all the way back to the July 24th low, right around 12,521. So 12,520 to 12,650 would be the range on that. But the New York Stock Exchange stronger than the Dow. Well, this is only 30 stocks. So now let's go increase this. Let's go take a look at the index charts here for the other indices out there. Window, tile, vertical. Give me a second here to, what the heck? There we go. So now let's go take a look at, the S&P. Let's take a look at the S&P 500. Let's see what the S&P 500 is doing out here. We're also going to remove this trend line. This is the one coming off of June 4th. We know that that area was broken. We're going to come back now down to the October 4th level. That low on the S&P 500, 1074.77. We're going to use that June 4th level here as the next trend line. Look at the S&P 500. The S&P 500, as it was moving down yesterday, hit that trend line. Hits that trend line. That area held. This area has been tested so far this morning. It dropped below. In fact, I'm taking a look at this horizontal area here. What I would really now use is the swing point low, just like we did on the Dow. That would be the swing point low from September 4th, 1396.56. So you can see it closed just slightly below that yesterday. That's what the S&P is trying to get back inside. 1396.56 out there. It's trading at 1396.38 right now. But the S&P looks kind of strong out there, just like the New York Stock Exchange did. If we go take a look at retracement levels from the low, from June 4th out there to the high that was put in here in the S&P, that's going to be your September 14th date. What you'll also see yesterday as the S&P was pulling back to the 0.382 level. Makes you think. When you pull back to a 0.382 level, you normally let some folks off of the elevator. That's what may be going on today. I do suspect we're going to see a bounce in the marketplace, whether it's today or tomorrow. Had a nice trend reading yesterday of 2.37. That is usually followed up with a bounce in the marketplace, a little relief rally out there. Maybe something more than that. We'll see. Let's finish this thing out. We'll go take a look at the composite or the NDX 100. And then the Russell. Let's go take a look at the NDX. That's what shows up here, or my eyes at least visually saw it. And let's color in those candles. Those are nasty-looking candles out there. Oh, and let's get rid of that. Okay, so now we've got the pretty candles out here. Let's go take a look at what the NDX was doing. Let's just simply get rid of what was on there. Let's come back to October 4th so that we keep things all in a matter of perspective out here. We take a look at, in this case here, it's actually October 4th. The low on the NDX was 2042.90. We're going to take a look and touch that up with the June 4th level. You can see that area was broken. You did have the index try to get back up inside there. What have I lost here on my screen? Looks like I've lost quite a bit. I hope that's just on the NDX. That gives you something to think about. Let's go over to the composite because I've lost the numbers on the side of the chart here. I'll try one more thing here. Load, default, nope. Okay, so I got a little corrupted file there. That does not bode well when you're doing a live radio show. Let's go take a look at the Russell 2000. We'll come back to the NDX perhaps in the break. But let's go take a look at the Russell 2000 out there. Of course, we all know that the NDX is weak, really being led by Apple. Apple, so far this morning, down $9 and change. So no bulls in sight yet on Apple. We'll go take a look at Apple, see where it is going to trade to. But first, let's go ahead and finish off by taking a look at the NDX. Let's get rid of everything out here on the small cap. So let's come off of the swing point low in October 4th on the small caps. You're looking at 601.71. We'll look at the June 4th level on the IW or on the Russell 2000. Come on, there you go. Which happens to be price. Well, we'll forget about the price. We won't worry about that right now. You can see yesterday the Russell 2000 breaking that trend line as well. You break a trend line, it's normal to want to go up and try to test that again. The Russell 2000 has not done that thus far, but let's take a look at its retracement level off of June 4th's low to the high put in the Russell. And the Russell, this case here is September 17th is the high out there. You can see it's below the 0.382 level. Next stop on the Russell 2000 ought to be the 783.20 level when it resumes its move lower out there. 877-927-6648. That's our call-in number. Give us a call. We'd love to have a co-host here. We take a look at Apple. You can see Apple during the first 30 minutes of trading had volume moving out of it as it was moving downside. Apple doing about 9 million shares during that first 30 minutes of trading. Only this next 18-minute session here, lighter volume, 3 million shares thus far. So looks to do about maybe 5 to 6 million shares. That is on a 30-minute chart out here. Have a 30-minute chart just simply to see if there's any bulls present out here. And there are none, even if we switch down to a more intraday time chart, such as the 10-minute time chart out here. Not seeing a lot of bulls on this chart as well. You are getting into an area where it is a little bit oversold, but more importantly, probably the daily chart out here. So daily, at some point in time here, the bulls are going to step in. The oversold condition of Apple, it has not seen this level since 2008, I believe. Last time it was down at this level of oversold condition was back in 2008. Doesn't mean that it can't seek lower prices, but it was back right around this time here, right around September of 2008 out there. So what is Apple doing? Number one, it's taking on the entire set of swing points from May 18th out there. That's the last time. Right now, it's not the last time. That is the, with regard to swing points out there, last time that you saw the bulls that it's taking on. That level has 22-ish million shares. Let's see, the actual low came in on May 21st. So 22 million, 26 million shares is what you've got. But we know so far today, already 8 million shares. So Apple's got some volume as it takes on this swing point. Apple breaks through that area, folks. Oof. Next time you run into a sign of potential strength out here in Apple, takes you back to January 25th, 2012. The price point there in the 450 range. Dow up 12, S&P up 1. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow off 13 points right now. We were talking about Apple as we went into that break there. You know, you'll have folks stand in line overnight, camp out for products on Apple, but they're not standing in line to buy Apple right now as it continues to trade lower. That is putting a real damper on the markets out here. Apple trading off $16 and change right now out at 541. So if we take a look at patterns out here, let's take a look at A to B equals CD. Down patterns, we're looking at the daily chart. Your A point on Apple is going to be the high from September 21st, $705.07. Your B point on this is going to be the level of October the 9th. Low out there, 623.55. Does a small retracement. The retracement that it does on October 17th gets up to 652.79. If we take a look at that B to C retracement, what we're going to see is of that A leg, it was a 0.382 retracement. That's suggesting that it was going to do more than a 1-to-1 A to B equals CD. That's what it's doing here this morning, taking out the 1-to-1 272 level. Yesterday it took out the 1-to-1 level out there. The next level on a to B equals CD down on Apple would be 520.73. Well, what do you have down in that area? That's really that set of swing points we were talking about on May 18th. And, of course, as Apple is doing that, it's getting into oversold conditions that it hasn't seen since 2008. Since 2008, folks. So it should not go straight down. there ought to be at least some type of relief to work off the oversold condition. But what you've got to do is you've got to go down into some intraday charts to see if anybody's going to stand in line. The 30-minute chart, nobody in line yet on the bullish side. On the 10-minute chart, the same condition out there. Let's go up to New Jersey, and let's go to Tom. Tom, thanks for calling. Thanks for holding.
Yeah, just a comment on Apple. If you go from the high to the low, it did a 1.681 expansion. It's probably going back to 432. It's got to fill all the gaps. It's just another product. It's like a Dell computer.
It is a good product out there, that's for sure. So
but it's just a product. It's just like a computer. Eventually, people love things when they're babies. When they get older, they forget about them. It's just going to be a stock.
You can't tell me you're forgetting about your babies now.
You forget about when they're small, they grow up, you love them, and when they get older, you forget about them. It's the same thing with a stock. Look at GE, look at IBM, they still love it, but that's look at every stock. Every stock's made to go bankrupt.
Well, they're certainly not in love with Mako, my friend. So tell me what you're doing here.
I don't know. Look at their numbers, see if they're all BS or what. But they look like we're support there. And then check my other favorite, PEG. And why would the utilities go down? They pay such big dividends. What is everybody worried about?
They don't have an answer there. We can take a look at the stock chart for you for sure. But if we take a look at, are you looking to get in on Mako? Is that what you're surgical?
Yeah, they got a good procedure if you can think long term, better than Apple.
Yeah,
Apple's overkill. It's the next Dell.
Let's take a look at it, folks. Mako, M-A-K-O, is the ticker symbol. They are a medical device company. They market robotic arm solutions for orthopedic implants. If we take a look at the equity here, trading out at $14.11, this thing has been on a tear to the downside, big time. Made a high out here on the 28th of March. 2012 out at $43.75, like I say, trading out at $14. There's been nothing but institutional sellers in this stock, Tom. The first one really showing up May 8th as it had really wide price spread. I mean, you're talking this thing fell out of bed big time, was closed the night before, May 7th, out at $40. The actual close was $41.40. Next day, all the way down to $25.98. You get another sign of a big seller out here, which is on July the 10th. As it moves down with 21 million shares out here. And so I would not recommend, here's how you trade this. I mean, this is really pretty easy since you like the company and you like what they do. What you want to do is, you want to wait for a sign of strength. You want to see somebody come in, some big bucks, some big funds, and they can't hide. They can certainly accumulate stock. At the lows, if you see accumulation going on for a period of time on low volume, at the lows, that would be one sign. But you want to see a sign of strength. Just like we've seen signs of weaknesses to the downside. It doesn't have to be the same type of volume. You don't need to see 22 million shares. But you want to see a sign of strength and then let it pull back, either by a retracement, maybe 0.618, maybe let it come back.
What can it retrace back to?
What can this retrace back to right now?
Yeah.
Well, if we look at the monthly chart here, that would probably give us the best picture. If it breaks the low from August of this year, which is $11.99, the next level is $9.28, and then you get all the way back to $5 and change.
Sort of like Dendrion, DND.
Yeah. So wait for a sign of strength. If you see a sign of strength, that is your identification for a stock that you like to follow. 877-927-6640. Dow's off 16 points right now. S&P's off 2. We'll be right back, folks.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Flat market out here. Dow off 2 points. S&P totally flat, 7 cents to the 1 penny to the downside. Composite up 33 cents. Russell 2000 down 4 ticks. Let's go take a look at PEG for Tom out there. He wanted to take a look. He's been looking at trying to get into the public service enterprise group. And this thing here, no bulls really showing up here thus far. This equity continues to move lower. It really wants to come down to test the April 10th level. That would be 28.92 to 29.45. In lieu of any bulls showing up, that's what you want to do, is you want to wait for the equity to get down there and test that level. Of course, I would also wait for a sign of strength before I would step into this equity here. Let's go take a look at, well, what did I want to look at? Where did that go in my mind here? What was it? Okay, so I did want to take a look at something totally. I wanted to take a look at the gun stocks out there. So yesterday for our gal Angie in the den, we were taking a look at Smith & Wesson. Smith & Wesson here had gapped up yesterday. This is a equity that was on my buy list. We sat tight on it as it was pulling back with volume. Of course, this thing came back really and did what it was supposed to do. Came back to the area where it broke out, which was on September 6th out here. That level had 4.5 million shares. As it stepped in on November the 2nd, came back with 3.2 million shares. So it came back to the breakout area. This had a nice move topside yesterday with 8 million shares. 8 million shares. The swing point high has only 2 million shares. Well, today you've got some additional follow-through on this. Thus far in the first hour and 6 minutes of trading, it has done 2.7 million shares as it's coming into the swing point with 2 million shares. So Smith & Wesson here looks like this thing has got some a little bit of clear sailing, but we've got to go put this on a weekly chart because it's going to run into some resistance. You can see this on the daily chart, but we'll put this on the and that level looks like about the 20. Hold on a minute. Let me make sure because it's so small. It looks like about $13.89. There was 14 million shares. That's when it last gapped down. So it looks like that is where it's headed to. But let's put this on the weekly chart out here. Again, this is for Smith & Wesson, and you can just see just what a horrible bloodbath this thing took here. And we've got a big, huge supply line, right? And it's really hitting it right now. That is the week of November 2nd, 2007. 30 million shares to the downside. The low is 1054. It's trading just inside there right now, 1087. So on the daily chart, you see some nice signs of strength out there, but it is running into some turbulence here. So it may start to lose some steam. So if you are in this equity, just be careful. Sturm Ruger, RGR, I believe that also is having a good day, up 9%. So let's go take a look at that equity, see what it is doing. Used to be, maybe it still is a IBD stock out here. So as we take a look at Sturm Ruger, looks a little bit better than the Smith & Wesson stock. Now let's go ahead and erase all the lines out here. So this morning with volume taking on a swing point, 600,000 shares so far in the trading session. Taking on the swing point from September 18th only has 482,000 shares. If it can close above 52.03, you're trading at 51.92 right now. This should go up to the swing point highs, revisit the May 2nd level. That would be at about the $58.19 range. Of course, if you can take out this swing point we know we've got the volume today, so this could actually be setting up one heck of an A to B equals CD up. Let's go take a look at the large one out here. That would take you, except for that high volume down there, but it would take you from the 8 point here of June 8th, below there, $34.22, the swing point or B point. It's taking on that September 18th level, 52.03. The pullback is on November the 1st out here. So if it does take out that level, actually looks like it's setting up a butterfly. Well, it's setting up a run to 60.86 or so, which would take on the highs going back to May 1st, which is really the $58 level, $58 in change. Looks like that's where Sturm Ruger wants to run to. Let's go take a look at the leader, up 22% here this morning. Let's see if there is a buyout. This is Easy Chip Semiconductors. So I don't see anything here. Let's go take a look at the chart and see what it is doing. The ticker symbol there is EZCH, and having a nice day with volume and coming into the area where it last broke down. That had big volume on the way down. So I don't jump in front of this here just yet. This equity, if we take a look at it, made a high as recently as April 19, 2012, out at $46.79, made a low back in August of 2012, $27. So it took quite a haircut out there. Had a real sign of weakness. The first sign out here happened to be institutional selling April 24th as it moves down with 1.6 million shares. Really had a move down. A second sign of large institutional selling, that is where it broke down, and that's where it's going into right now. That took place on August the 8th, 4 million shares to the downside. So as we take a look at this is just moving back up into the area where it broke down. And let's take a look at this here. So you got a little bit of a supply issue that it's dealing with. So that is the red line. The level there is $38.33. It got up to a high so far today of $38.27. It's going to have volume, 1.1 million versus, so it's coming into that swing point that only has 688, but really you're benchmarking against the 4 million shares. So this thing may either just simply consolidate between these levels here of about the $30, $40 range and the lows of $27. That would be a nice little consolidation range. Or it, for some reason, and again, I don't see what it is. I see they had revenues of $9.3 million, but that's all that I show on my screen here at the moment. So they must have guided something, or there must be some other piece of information that is out there. But that is on EZCH, EZ chip semiconductor. Apple down $11 and change right now. Let's go take a look at Concho Resources. That's off about $4 and change. CXO is the ticker symbol there. That is the second in dollar-wise to the downside here this morning. So moving down with volume. Let's go see where this is trading into. Moving down into a swing point low here, which is going back to June 25th, 2012. That price point is $76.17. It's trading out at $82 and change right now. It looks like it's coming in there hot, meaning with more volume. The volume on June 25th was 1.6 million shares. The volume here, 1 million shares so far in just an hour and 40 minutes of trading. So where is this going to move back to? Let's put this on a longer-term chart out here. Let's just move up to the weekly chart. This is on Concho Resources. So it is... if it closes inside, I would say this thing could pull back all the way to 63.20. Takes you back to the October lows out there, October 4th lows. Just had a little pop here in the market with the Dow down 30 points right now. So let's go take a look at what's going on inside the ETFs. Let's switch over to the 10-minute charts out here and see what is going on. If we take a look at the Qs here, we'll start off with the Qs. That's my upper left-hand corner. You've got, and this again, this is just a 10-minute chart out here, but the 1140 swing point from yesterday, that had 2.3 million shares. So far, as you're coming in with light volume. You did 1.5 million shares at the 10:30 10-minute time frame, 1 million shares at the 10:40 time frame. Those lows are being tested here right now. You've got 7 minutes left, 550,000 shares to the downside. So right now the Qs, they're taking on that swing point, but volume-wise, I don't see the conviction just yet. We'll have to come back in 6.5 minutes to find out. Let's go take a look at the diamonds, see what the diamonds are doing. I'm sure they're all coming against the swing point. In the case of the diamonds, it's against this little hammer out here on the 10-minute chart. Let's just draw the line across the bottom. The level there on the diamonds, it has volume. It says 1140, so we're taking a look at the same time frame. The diamonds here have volume there of 563,000 shares. As the price is moving down there, not conviction. So 206 at 10:30, 217,000 at 10:40. 4 minutes into it, it's got 171,000 again, going against 563. The level on the diamonds that it would need to break would be 128.65. So right now it doesn't have the conviction volume-wise. Let's go take a look at the small caps, see what the small caps are doing, the IWM. Again, we're going to take a look at that same 1140 swing point. Let's draw the lines across. We'll simply draw it across the bottom since it's into the top of that bar. And let me draw the volume across the bottom as well. Volume on the IWM, you're looking at 1.5 million shares that it is going into. And the actual volume, as the small caps have really just traded sideways here at 1.1 million at 10:30. So that 1 million is still light against 1.5 million. Then at 10:30 to 10:40, a little over a million. And so far, 580,000 shares with 6 minutes to go. So the small caps have still don't have the volume yet. They're a little bit closer to the volume of that 1140 session out there. So right now might just have been, I don't know what drove that little punch down there, but volume-wise it wasn't there. Let's finish this out. Go take a look at the SPY on the 10-minute chart. Also has a hammer candle down there. If we take a look at the low of that hammer on the SPYs. It's 139.06. I believe we talked about that during the Trader's Edge show. Let's go take a look. Let's mark the volume here and watch as the SPY moves in there. Again, what you can visually see is it does not have the volume to crack that yet. And what you have had is you've had a test of the hammer right at about the 50% level of the wick down there, that long lower shadow of the hammer. And looks like it's really going to try here in the next, it's got 5 minutes to go in this session. But right now, maybe it's going to try to go ahead and create another hammer candle. If it closed right now, it would be a hammer candle out there. So no real volume here to the little down thrust that we saw here a few minutes ago, at least on the ETF structure. What I will do is let's go over and take a look at the currency chart. During the Trader's Edge show, we're showing where Mario Draghi was hanging out, and he's hanging out in the weeds at the price point of 1.27187. That is where we've seen a couple of bullish engulfing candles. That sets up a support level. The real support level would be this larger bullish engulfing candle that came in at 9 o'clock this morning. That level, 1.27160. You get a close below that, and that will be some fuel that could certainly drive prices lower in the markets here in the U.S. So let's continue taking a look. Let's go back and let's take a look at Google. Haven't looked at Google today. That's putting some pressure in the markets. That got that was a little bit crushed yesterday, I believe. Volume-wise, it's trading down $5 and change, off about 0.8% here. Let me move over to the show charts here, and we'll take a look at Google, see what that is doing. Come on, where are you? Yeah, where is Google? Well, I can't find it. It's probably right in front of me, but we'll put it up on the screen. GOOG, the ticker symbol out there, trading towards its session lows here this morning. Actually doesn't look as bad as I thought from yesterday. What is Google doing? Google is took out a swing point here most recently. So the swing point we're looking at is October 22nd, a little over 4 million shares. The low there, 669.70. Yesterday closes below that, closed at 667 on 2.2 million shares. So 2.2 million shares taking on 4 million shares. I don't think so. So far today, you've got lower price, but this break of the swing point down here may not be real. At least that's from a volume perspective. Now, what could Google do? Certainly, because it's in the middle of floors out here, you could see Google travel down to the 618 level. That would be out at 639.74. It's trading at 662 and change as we speak right now. Let's go take a look at Dillard's. That is popping to the upside. The department store DDS is the ticker symbol. They were out with numbers. We're 1.45 billion versus 1.4 billion, so not too bad. Net income 48.5. Oof, man, they took a hit. 48.5 million versus 228 million the prior year. So they must be guiding some wonderful fourth quarter information out here. Let's go take a look at the stock chart, DDS, or they had some kind of a write-off. Let's go take a look at the stock chart and see what it is doing here. Gapping up this morning with some decent volume behind the move out here. DDS, again, being the ticker symbol. So apparently profits aren't, what the heck? They had a sign of strength out here. Last sign of strength in this equity came in on August the 9th. 1.7 million shares gapped up. We can see how that level was tested. And so we'll go ahead and we'll pull this back, and then we'll go take a look at today's action. So take a look at patterns out here in Dillard's. What you will notice is this thing broke out. You had a nice sign of strength actually the day of August the 8th. You gap up on August the 9th. August 8th, the high was 72.05, 1.3 million shares. You pull back into it with 320,000 shares. That's a nice test. And then it moves topside, moves higher, gapping up this morning. Dillard's trading out right now at 85.67. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back as we come back to the last segment of the Money Masters show. I've got the DAX up on the screen here. Why the DAX? Because that's been the strongest index out there, at least the indexes that we follow. Back to the bottom of its consolidation range here. Of course, it took a full 2 days to go from the top to the bottom. It has been traveling in the sideways consolidation range here. Now, the DAX doesn't close for another 36 minutes. So maybe Basil will cover it. He's up next here as we do on Thursdays, and the DAX. So look for, if the DAX holds coming into the 11:30 session, is able to hold this consolidation range. What does that set up, folks? That sets up a bounce to the top. And that's what I do expect that we will see inside these markets here. We'll see higher price before we see a lower price. And the DAX is one of those charts here where you're going to want to follow if it does. Now, all bets are off if the DAX closes below the 71.2068 level. Let's go take a look at a couple of the sectors within inside the S&P 500. And first, we're going to take a look at the energy sector. But in order to do that, what you want to do is you want to take a look at ExxonMobil. Why? Because they represent such a significant share of it. So ExxonMobil yesterday moved down. Volume wasn't too bad. Came down, pulled back with 19 million shares. That was going into this little line, this horizontal line of support and resistance, now acting as support, which really takes you back to the swing point high of January 23rd, 2012. That high was 87.94. Now, what it's really also doing, you have to expand this up. You can see this little open window, this little gap up from September 6th, Mario Draghi Day. You still got a gap open there. Volume on that candle was almost 16 million shares. So you did have volume. You couldn't bust it down. That is an area of strong support. So it's got this line here for ExxonMobil. It's really a very strong support area. Can ExxonMobil trade to 87.65 and close back above 87.65 and still be strong? Oh, it most certainly can. So ExxonMobil will be one of those stocks that you would want to be following if you're short, to give yourself a signal. Because in this case here, if you were short on the energy sector, of course, ExxonMobil, I believe, is the #1 holding inside the S&P 500. So it is a good stock to watch because it is strength out there. And really, when you take a look at yesterday's action, held up pretty well. Now, if we go take a look at the XLE here, real quick, we'll see that the XLE doing the same thing, coming up against the swing point. Now, what the XLE did, so you've got CVX and others that are inside there that were pushing it, but the XLE is pushing on the September 4th swing point low. That is 70.40. That only has 8.7 million shares. Yesterday came into at 19 million shares. Today you're trading just slightly below it, 2.7 in about an hour and a half. So that probably equates to volume exceeding the 8.7 million shares on September 4th. But you'll want to see, if you're short, you want to see it close below 70.40. That's at September 14th level out there. If we take a look at the financial sector here, I run through those, see what the financial sector is doing. Financial sector looks a lot like the DAX chart in that the financial sector actually is the stronger of the sectors out there. This thing had a wide price spread, accelerated volume on September 13th, 140 million shares. That was to the upside. Yesterday's move to the downside, only 116,000 shares. This is trading in a sideways range. This is not a short. This is not a short until you break down probably below the September 6th low of $15.24 out here. Right now, the financials, the XLF sector, actually pretty strong out there. Stay tuned, folks. Basil Chapman will be up next. Then, as we do on Thursdays, we go up to Larry Pesavento, or out to Larry Pesavento on the West Coast. Daryl Martin 1 to 2, David White 2 to 3, Ken Shreve 3 to 4, the Tom O'Brien Show from 4 to 6. Have a great day, folks. We'll look forward to seeing you again very soon. Take care.